Good day, I'm Cody Ann Barrett and welcome to Frontline Business. Jamaica's tourism sector recorded growth last month despite the declaration of a state of emergency in St. James. Tourism Minister Edmund Bartlett says during the month there was a 6.8% increase in arrivals with 7.6% growth during the period when the state of emergency was announced. Concern has been raised that international media reports about the state of emergency could put a damper on tourist arrivals in Jamaica. Mr. Bartlett and the team will travel to London, New York, as well as Europe later this month to promote the destination and its offerings. And Mr. Bartlett says projections are for 450,000 visitors out of Canada this year. He said there were 405,000 visitors from Canada last year, up from 370,000 in 2016, reflecting a 9% increase. Mr. Bartlett recently returned from Canada, where he met with tourism stakeholders and groups. Meetings were held with a number of travel planners to alleviate concerns regarding the state of emergency in St. James. According to the tourism minister, he met with a group which will be bringing 600 visitors to Jamaica next month. Jamaica-based business process outsourcing BPO company, ITEL BPO, has purchased U.S. firm Granada Corporation, a bilingual customer experience outsourcing company. Granada has operations in the U.S. and Mexico. A statement from ITEL BPO says acquisition was finalized in December. Through the acquisition, ITEL BPO will take on 200 staff members from across Mexico and the U.S., as well as expand its services into retail and insurance. ITEL BPO, which was launched in 2012 with 7 employees, now has a staff count of more than 1,000. It has offices in Jamaica, the Bahamas, and Tampa, Florida. In Tuesday's trading session, the JSE Combined Index declined by 2,695 points to close at 296,170. Overall market activity resulted from trading in 49 stocks, of which 15 advanced, 29 declined, and 5 traded firm. The Junior Market Index declined by 28 points to close at 2,968. Among the winners were 1834 Investments, Berger Paints, Cargo Handlers, Siboney Group, and Phosphorus Company. Stocks declined for AMG Packaging and Paper, Cable and Wireless, Caribbean Cement, Caribbean Producers, and Carreras. Stocks traded firm for 138 Student Living, Caribbean Flavors and Fragrances, Proven Investments, Pulse Investments, and Wisynco Group. Wisynco Group was the volume leader with 494,217 units, followed by Proven Investments with 436,300 units, and Siboney Group with 254,355 units. On the foreign exchange market, the US dollar is being sold for an average $125.77. It's costing $100.75 for the Canadian dollar, while the pound sterling is being sold for $174.75 and the euro for $157.05. News in oil. Oil prices extended the previous session's losses on Tuesday as financial markets remained volatile after a sharp sell-off in equities. Strengthening of the U.S. dollar and the onset of refinery maintenance season also weighed on futures. Crude oil futures sank in early morning trade as stock futures remained under pressure, with international benchmark Brent crude hitting a one-month low. Brent was down 63 cents or 0.9% to settle at $66.99 a barrel after falling as low as $66.53 earlier in the session. U.S. West Texas Intermediate crude ended Tuesday's session down 76 cents or 1.2% at $63.39 a barrel. In the meantime, big oil stocks were the big losers during 3 sessions that saw the Dow Jones Industrial Average post its biggest ever daily point drop. ExxonMobil is down more than 12%, while Chevron has tanked 7% since Friday, when a better than expected U.S. jobs report sent bond yields higher and raised inflation concerns. That sparked a sell off that saw the Dow fall 666 points by the end of the session, plunge another 1,175 points on Monday, and gyrate wildly on Tuesday. But shares of Exxon and Chevron were already spiraling before the jobs report hit the market on Friday. Both companies reported disappointing quarterly profits before the bell. Despite an oil price rally, Exxon's U.S. exploration and production business posted a profit loss. Meanwhile, lower margins in Chevron's international fuel refining business and impacts on U.S. refiners from Hurricane Harvey dragged on its overall earnings. The S&P 500 energy sector turned in the worst three-day performance in the index, shedding more than 7%. And that's it for Frontline Business. I'm Cody Ann Barrett. Regional stories are next after the break.